we're very excited because today marks the beginning of our webcast series, Affluence to Wealth. Today we've got Todd Trowbridge, and every month we're going to be bringing a special guest to talk about new industry trends, and we want this to be as interactive as possible. So you can type in any questions in the chat, and then we'll get to those later. Today's episode is on deals and tax minimization for investors. So as I said, we've got tax specialist here, Todd Trowbridge, who we'll have a conversation with, and then we'll talk about any deals that we passed, any deals in the pipeline, and any deals that we've closed. So before I jump into that, I just wanted to remind everyone that if you have any questions, we'll answer them at the end. So Todd Trowbridge, thanks for coming. He's a CPA, but not only is an accountant, he's an entrepreneur. He set up Trowbridge Professional Corporation over 20 years ago to help his clients abroad save on taxes, minimize taxes, and help their businesses grow. Next to Todd, we've got Sahakian, managing partner at PEgate, and he brings over 20 years of private equity experience, from PE funds to PwC, and also starting and running his own business. Ara actually spent 2 years at the Terry Fox Foundation in leadership role as well. And finally, my name is Sarmen. I will be your host for today. I spent 10 years in capital markets at JP Morgan and RBC in London, UK, and in Hong Kong, and here in Toronto. And I'm also an equity partner in PEgate, where I am currently full-time. So before we jump in with Todd, given this is our first episode, I wanted to take a step back and talk about the title of our webcast series, Affluence to Wealth. So Ara, why don't you give a little background on what Affluence to Wealth means and how we chose it?
Good question. How we chose is we hired an agency and we told them, what we're trying to do. And part of what we're trying to do is give entrepreneurs some form of exit so they could enjoy their life, as well for people like us who like to invest, give them an opportunity to get involved in PEgate and lead a transaction. So maybe quit their job and join the acquisition world, and as well for investors, giving them access to what we believe in the markets kind of support us as one of the best leading asset classes, which is private equity.
Right.
So instead of parking your money in low yielding assets, bringing that opportunity to investors. So that's where Affluence to Wealth came in. Affluence is someone that is doing well, has a good lifestyle, versus wealth doesn't have to be financial. Someone doing what they enjoy. So
it's not just how much money you earn or how much money you have in your pocket. It could be a feeling, a time, having the time. You were saying an interesting story. When you came back, there was someone. Yeah, so I was in the Caribbean, and our little boat captain, who was, very happy, seemed very happy, and his wealth, he couldn't stop talking about his 4 kids, and for him that was some people. That was wealth, exactly. Headache to others, but But for him, it was wealth, and also he was doing what he enjoys. So it's definitely not financial. So that's where that's why our agency felt that best describes it. We actually like it. Awesome. Yeah, that's cool. Thanks for that. So we'll jump into some questions with Todd. So just to give everyone a little background, what made you start Trowbridge Professional Corporation, and what are some of the services you provide and specialize in for your clients?
Sure. So we started Trowbridge almost 20 years ago. Just as I guess myself and my 2 partners, Ernie and Wayne, came out of the Big 4 accounting firm environment. There's a lot of we always had tons of ideas on what we want to do and how we might do things a little bit different. And we saw this opportunity in serving clients that are mobile internationally and have international tax issues, and so that's where we started, and we've just kind of grown up from there. Sort of branched out into different areas. One, I sort of oversee the corporate side of things, so companies that have international issues, whether it's outbound outside of Canada or back into Canada for foreign companies. Then we also, global mobility services, another big area, sort of helping mobile executives and companies that are moving people around in and out of Canada. And then just in, the private client services, it's focused around individual tax services and individuals that have international tax issues. So
Interesting, interesting. Yeah, I know that when I was living abroad, that was a big need for me, where you have to report taxes when you're working internationally. So yeah, definitely a service that is useful. So, there's a lot of investors here on the call, and we were wondering, given all the different asset classes, whether it's bonds, stocks, public equities, private equities, you name it, real estate, cryptocurrency, what would you say is the best asset class to invest in strictly from a tax perspective?
yeah, I mean, clearly, like if you're earning investment income, capital gains is definitely the most favorably taxed in Canada. For residents of Canada, it's only subject to tax at 50% of the normal income inclusion rate, which ends up being around 26 or 27%
Right.
for a top marginal rate
Right.
taxpayer. And for non-residents that are investing in Canada, generally, unless they're disposing of taxable Canadian property or carrying out a business in Canada, they're not generally subject to tax. So they're effectively not paying capital gains tax on their investments here.
But so depending on the jurisdiction.
Yeah, so there's always so there's always the home country that has to be considered as well.
So that's where your tax planning comes in. And so assuming you're in a favorable jurisdiction.
Yeah.
And there's treaties, the capital gains would be as little as 0%
Correct.
in certain countries. Yeah.
Yeah.
So as a foreigner investing into Canada, and where would the tax come in for that? Would they have to file a return ever?
Yeah, they really only have to file a return if they're carrying on a business in Canada directly. So generally, as an investor, unless it's an investment in a partnership that's carrying on business in Canada, there wouldn't usually be a need to file a return in Canada. The other scenario is where you've disposed of taxable Canadian property. So there's a bunch of things that are included in that, and taxable Canadian property is essentially still taxable to a non-resident in Canada. However, it's typically things like real estate. Real property in Canada is generally always still subject to tax, even as a non-resident.
So what you're saying is there's tax benefit of investing if you're a non-resident,
Yes.
investing in an active business versus real estate.
Yeah,
Is that right?
yeah, really just a share in a private company, or it could be a public company as well, but generally shares that are going to give rise to a capital gain when they're sold.
Yeah. And being abroad, there's certain other tax rules for having rental income in Canada.
Right.
Then you'd have to file and.
Yeah, most countries maintain the ability to tax, things like rent on real estate and things like that.
Interesting. So what would you say some of the differences are between dividend and capital gains from a tax perspective?
So dividends that are paid that are sourced from Canada are going to be subject to a non-resident withholding tax. So under Canadian tax law, that imposes a 25% withholding rate.
Okay.
However, depending on where the non-resident investor is considered resident, sometimes Canada would have a tax treaty with that jurisdiction, and it could reduce it to as low as 5%.
Interesting. Great.
And it's so it's up to the Canadian company investment vehicle to withhold that tax.
That's correct. Yeah, and that does represent a final tax as far as Canada is concerned. Assuming that the withholding's been done at the correct rate and they're not otherwise a resident of Canada. And so the other consideration is, looking at how that income is taxed in their home country. Oftentimes, if it is subject to tax, there's also a corresponding foreign tax credit, which basically would reduce the local tax.
Interesting. So if we bring it back locally, for those who do pay taxes here in Canada, it's not the lowest tax rate. But would you say is Canada a tax friendly? Is Canada tax friendly from an investor's point of view?
Yeah, I would say so. I guess it depends on how you look at it. If you're generating capital gains, it certainly is. Can you compare that to the US? It doesn't necessarily have to be like in the US would have to be a long-term capital gain to qualify for a lower income inclusion rate, whereas in Canada, there's not really just have to qualify as a capital gain.
Right.
Not necessarily related to how long you own the investment. And then
There was some I know there's some grants like SHRED and
right.
whatnot, which help the environment for investing.
Yeah, certainly Canada has a reputation for having high personal taxes, which is true for things like interest income and employment income and business income you're earning directly. But certainly from an investor standpoint, you know, to the extent you can realize capital gains or to the extent that you're non-resident, it's usually going to be less.
Right.
So
Yeah, so it's friendly for business entrepreneurial
it is, yeah.
person, investor. And then let's talk about for residents of Canada. Many people don't know of this exemption or have used it. Let's talk about the lifetime capital gains exemption.
Yes.
And so what is that all?
Yeah, so basically it's an incentive, I guess, for entrepreneurs to start businesses in Canada and be able to benefit from you know, certain exemption from capital gains tax. So, you know, I mentioned that capital gains, there's only subject to tax at, you know, included income at 50%.
Right.
There's a special class of capital gains that you know, essentially applies to a Canadian controlled private company, meaning a corporation that's incorporated in Canada and meets certain tests to become a qualified small business corporation. You know, it looks at where the business is carried on, how long you've owned the shares, and you know, what percentage of the assets are considered active, you know, basically part of the business. And essentially on a sale of shares, you know, Canadian residents investing in one of these qualified small business corporations can you know, essentially gets a tax exemption on the first, you know, roughly 900,000 of capital gains realized on that sale of shares. And that amount is actually indexed, so that it, you know, generally has been going up every year.
Interesting. And is that per person, or is, like, for example, for a family, is there any limitations? Is it per family or each person, or?
Yeah, so it is based, that limit applies to each person, so it is a lifetime amount, so you can generally only claim it once.
Right.
However, there are different structures you could put in place that, you know, would give you the ability to sort of spread that out amongst your other family members.
Right.
For example, if you were to use a trust to own the shares with multiple beneficiaries, that might be one
Right.
way of getting multiple access to it.
But you could claim it on multiple investments. It doesn't have to be one investment.
Doesn't have to be one investment, it's just more of a limit.
Limit, you have a, right now, there's a $900,000 limit.
Yeah.
That's all, but that's basically that's what we mean by affluence to wealth, because that's basically paying 0% versus over 20, you know,
Yeah.
5%,
Yeah.
potentially
Yeah, exactly.
tax. So, and that's where, and who would you say uses that the most? Like, many people don't know about it. Is it, you're saying before, entrepreneurs? Like, what percentage of entrepreneurs do you think know about it or have used it?
I'd say, you know, roughly half. It's one of those things where, you know, like if we're advising a company on the tax side of things on how to structure their business, you know, we always try to feel out whether or not that's going to be an option to sell shares in the future. And if you don't know, you try to put yourself in the position to claim it if possible. Now, the other side of that is, you know, it also has to mean that there's a buyer willing to buy those shares as opposed to buying the assets of the company.
Right.
So there, you know, sometimes there's negotiation there as to how you get it. But
That's a good comment, because when we go to acquire, their sellers are generally surprised that we would like to buy shares.
Yeah.
And that's a huge advantage to them.
Yes.
So why would they even consider just selling assets? Is it the buyer doesn't want to take the liability? Is that?
well, from a buyer's standpoint, if they're buying a business, you know, there's a step up in basis of the underlying assets they're buying, and that's really the advantage of buying assets. So, for example, if, you know, a good part of the business is goodwill.
Right.
A lot of times that's not recorded in the balance sheet if it's internally developed. So by, you know, allocating part of the purchase price to goodwill or any other assets they're acquiring, gives you the purchaser the ability to write it off, whereas otherwise the company wouldn't be able to.
Interesting. So I know a lot of people are looking for some advice. So what would you say some advice would be for residents looking to move abroad from a tax perspective?
Yeah, so there's a lot of considerations, like, you know, if it is something you're looking to do, it's not just about the tax. I mean, you also have to look at the cost of living in the jurisdiction you're going to. You know, because quite often it looks more favorable, but may not necessarily be more money in your pocket. A lot of times it is, but you know, definitely planning in advance, especially if you have ownership in a business or if you have various investments that have appreciated in value. There are implications to becoming a non-resident of Canada. So, for example, there's a deemed disposition of capital property when you leave Canada. You know, and there are ways to mitigate that or defer it. That's kind of where we would come in, as well as just figuring out, you know, whether or not they're in a position to seize Canadian residency. The other side of that, in terms of how far you have to go to cease Canadian residency, it really depends on whether or not you're moving to a treaty country or a non-treaty country. Sometimes it's a little bit easier to cease residency and, perhaps even maintain some of your ties to Canada if there is a tax treaty in play.
Right.
Without getting into all the details.
Yeah. And then what about it for a non-resident moving to Canada?
Yeah.
Any advice there?
Yeah, again, it's the more time you have to plan in advance, the better, because there are planning opportunities available to you. So for example, if let's say I'm a non-resident currently and I own a business that has substantial value. Well, when I move to Canada and become a Canadian resident, Canada allows you to step up the basis in the shares of that investment of that company. And the idea behind that is that Canada only really looks to tax you on gains that accrue to you while you're a Canadian resident.
Right.
So, basically the planning that we would look to do in that scenario is look to put you in a position to be able to extract that value tax-free in Canada by using that basis that's available.
Right. Interesting. And then what about for someone looking to break ties? Leaving Canada, wants to just break ties from a tax perspective. Any advice there?
Yeah, again, like there are, specific filing requirements.
Okay.
So it's a matter of taking a look at all your assets. If you own a business, that adds a bit more complications. You got to figure out what to do with that, how best to hold the business. But without doing anything, you could put yourself in a position where you have to pay substantial tax on exit without having liquidity to fund it.
Right.
So,
Interesting.
so yeah, it's the common thing to say for an accountant or a lawyer, but you got to get advice and make sure you understand what the implications are so you can do what you can to mitigate.
And you're someone that has that advice, so people can come to you.
Yes, absolutely.
Okay. Okay, so let's talk hypotheticals here. Let's say you could choose anywhere in the world to live. Where would you say is most favorable from a tax perspective?
It's a tough question to answer. And
We like tough questions.
Yeah, we do get asked that a lot, where to go. And to be honest with you, I usually duck away from that question. You look, usually you don't let the tax dictate where you're going to live, because there's so many other more important factors than tax. Obviously, if you have a short list of countries that you want to go to, it can come into play. But I can't say that I can't think of one particular place that that I would
Somewhere
choose.
like Bermuda or Cayman Islands, or
I mean, both those places don't have personal income tax, so yes, certainly attractive from that standpoint. But again, you got to look at the cost of living.
Is the US as attractive as it used to be still?
It depends where you go. So certain states have no state tax. So for example, Florida, no personal income tax. So for example, Florida and Texas both don't have a personal income tax. But still, you're getting close to a 40% federal tax rate. And, so there is definitely a difference.
But for an investor who has access to capital gains exemption, and you could do some family planning, Canada's not a bad place.
I don't think so. Like there are ways to, especially if you're a business owner, there are ways to help minimize the tax for sure.
Interesting. Okay, so one last hypothetical question here. Let's say you had $20 million. Would you come back to Canada?
I personally would, because I love it here. And, it's you have a really good lifestyle here. Obviously, healthcare is pretty good. There's I'm not saying there's not a lot of room for improvement, but just in terms of lifestyle, I guess I'm a little biased. I would certainly come back.
Well, yeah, and the safety aspect too.
Safety for sure.
There's a reason it's listed top, in the top 10 countries to live in. There are 3 cities in there,
Yeah.
including our Toronto.
Yeah. But if you're coming, make sure you have a good tax advisor. That's all.
Yeah, there we go. Awesome. So we'll jump into the deal section portion of this webcast. So we've got 4 deals for you guys today. So Ara, why don't you kick off the first one?
Yeah, so there's one. So just to show you the type of deals we're looking at actually a management buyout, supporting managers to buy out the owners, and we're funding it through a convertible debt. So that's coming up. That should be posted shortly. You want to take the next one?
Yeah, sure. So the second one, it would be a 100% purchase. They're having a bit of succession issues that we're here to help with. I love the company. They've been around for 40 years, really reputable in the industry. They are taking a while to provide their financials, but hopefully we'll get those soon to proceed with our due diligence and hopefully on the platform soon.
Yeah, that's the problem we're facing. It's because we're targeting a lot of businesses that with owners looking to retire. They're not as quick to respond.
Yeah.
So in that case, yeah, the finance team is, fairly weak, I would say.
Yeah.
And but it's a 50-year-old business. It's cash positive, so we're hoping.
Yeah.
Pretty typical.
Very
Pretty typical
right?
for an owner managed business. I
Yeah.
mean, a lot of business owners would, run their business based on what's in their bank account. So it's not
Right.
overly surprising.
But honestly, we get excited when there's companies that are very weak in certain departments such as marketing, no branding, no website, or their finance or accounting team is weak, because that's something that we can help with implementing better checks and balances. And we have certain specialists in marketing in all these different departments, then that's where we're able to add value. So they definitely need the help, but there's a lot of potential. They've been around for 40 years, so.
And apologies, like we know we're not posting lots of deals, but we're being very selective. So our interest is the investor. So that's who we work for. We definitely want you to make a great return. So our vetting process, we actually turned down a deal we've been working on for 3 years.
Yeah.
It was 1 week away from closing, and we pulled the plug. There are certain risks that we weren't willing to take.
Yeah.
So we're being very careful. But it's things are getting very busy. So we even have a deal in Dubai we're looking at. Actually, when I worked there, I had looked at this business when I was at HSBC Private Equity. So it was a very interesting business. They had one major customer, but they've diversified since, and so we'll see how that goes. But
You need some international tax advice.
we do. Yeah,
It's
we
fun-
might get lots of Dubai investors.
Yeah.
For it. Absolutely, yeah.
It's funny because R and I thought the deal flow would be very low during the summer months, but on the contrary, there's a lot out there. There is a lot of scare, recession, interest rates are rising, geopolitical risk. So I think a lot of these factors are kind of pushing people to try and get the best price now. But definitely lots of deals out there that we're looking at.
Yeah, and there's still dry powder, like within the
A lot.
PE funds, lots of dry powder for private equity. VC is probably taking a bigger hit.
Yeah, I think people are starting to take their foot off the pedal in terms of very risky investments. They're just looking for cash flow, and that's what PE is all about versus an app that might change the world. So there are companies that this next one actually interesting. I love this one because it's so recession proof. Regardless of what business cycle you're in, this service is needed. It would be similar to the first one he mentioned. It's also a management buyout, convertible debt that we'd have the option to purchase 20% in. I really like it, and they've been around for many years, and I don't see them going away. So hopefully we close on that deal soon.
Yeah. And another one where so every deal we look at, the number one question, we have a scoring matrix that helps us decide whether it fits our investment criteria. One of the major questions is the value we could add. And Sarmen mentioned the marketing is a big aspect, financial systems and operating systems is another one. But the other one is M&A. So we're M&A experts, and we're looking at a business, a very well-run business, to help them with their acquisition. So that's something.
Roll-up strategy is massive, right?
Exactly. Yeah. So that's another deal. I would say it's not in the short term, but we're actively working with them.
Yeah. And there's a lot of companies where it helps having synergies across portfolio companies. So that's most certainly a focus of ours. So I've got one last question for Todd, and then we can jump into the Q&A. What would you say is your proudest moment from a client perspective?
It's a tough one. Because there's been so many.
Oh, wow.
Yeah, I guess, anytime you can kind of make a dramatic impact on the amount of tax that they're going to save is always You know, it always feels good, I guess.
Right.
You know, so there's lots of different opportunities. Like, you know, I love helping people to come to Canada, be able to, like I mentioned before, help to derive their, you know, the value they built overseas and be able to still extract that in Canada without getting a major tax hit. You know, we've also helped businesses where the owners have moved outside of Canada to take advantage of lower tax rates and you know, help make sure they do things properly. So, you know, I can't pick one in particular, but
There's too many.
yeah, there are many.
Hey, helping someone save money, I think, is pretty impressive from my
But
That's really what
Yeah.
drives us.
Yeah, exactly.
So plan ahead though, because you know, I'm a customer of Trowbridge, and that's what I learned, and they're great at what they do. And the sooner you start that planning with everything. So in
Right.
Canada, we're used to thinking about tax. Every decision you make, you should consider taxation. Same when you're coming back to Canada.
Right.
Yeah, and monitoring what's happening with the budget. Like there has been speculation about, you know, whether the government would make a change to capital gains for Canadian residents, but so far we've managed
Lucky.
to.
Yeah. What do you think? Even they're talking about the principal residence, the house,
Yeah.
free tax to get on a house, that caused a revolution.
I think so.
Yeah.
I don't think it'd be a very popular move.
No. So, oh, we do have some questions. Have you seen those moving into Canada use PPL, private placement life insurance, to shelter assets from taxation, with otherwise will insure after becoming a Canadian resident? Is that clear?
I personally haven't seen that. You know, it's certainly something that may have come across, you know, someone at our firm. I haven't personally seen it myself.
Okay. But we'll provide, actually, Todds details are on the invite in LinkedIn. So, and we'll provide everybody his email, or how should they contact you?
Yeah, I'm happy to, you know, if someone wants to email me with any questions that they've got, and you know, I
Don't
don't
give your mobile.
I don't
middle of the
provide-
night, yeah.
anytime.
It's an urgent tax question.
Another question, are you industry agnostic in your deal sourcing? And what would be the optimal return profile terms you look at? Taking into account minimum IRR, other matrix, great question. We didn't, this is a real question.
It was not planned.
It was not planned.
Yeah.
Well, we are industry agnostic. What we look at is, would this company be interesting to a PE fund? Had it been larger or better managed? So we are very much exit focused, although the way our registration with the EMD, like we don't have a fund, therefore we don't have a mandated exit. So you don't have to exit. And that's why we have the platform allowing the secondary market. So you could sell your shares after a 6-month hold. So again, we target industries that are growing, that private equity would like to invest in. Our minimum IRR is 25%. And so far, we think we'll be more than achieving that. The longest hold we have, our first investment 3 years ago, we have 61% of the capital returned, doing very well. We should get more than 50% IRR, but that's
And they got quite a massive contract recently, right? So
yeah. So it's doing well. So we're looking after those companies that are a bit like a diamond in the rough, that just a bit of marketing, like on the first transaction, we moved their website from Yellow Pages to Squarespace, basic stuff. We're ranked #1 on the search now, and we're getting a lot of leads from that, and just the whole rebranding and just basic stuff. Also hiring succession. So we're targeting 25% definitely. That's on the equity side. On the debt, it's the management buyout debt will be at 12%. And our fees are very much performance driven. There's no upfront fees, there's no management fee. So you only, once you're invested with us, that's when the fees kick in, and that's generally when you get distributions.
The one thing I'll add to that, contrary to a typical PE fund where they have certain thresholds and hurdles to meet, each individual investor really has the flexibility to exit at any point. So while we might want to, let's say, us three purchase shares and we're 33% owners each, 5 years down the road, if it's at 40% IRR, I think that there's more to achieve in terms from an IRR perspective. But Todd, would like to liquidate, he can. So there's that flexibility where everyone, although collectively we do set a minimum IRR of 25%, people can decide as to when they want to exit. So that will, of course, impact the IRR.
Okay. Another tax question. Are you aware of using flow-through shares, FTS, in a manner that eliminates market risk, but lets the purchaser receive the benefits of the resultant tax credits? In effect, Canadians can get their personal taxes down to AMT, which I believe is lower than US income taxes.
Yeah, I mean, we've certainly seen flow through shares. I haven't, again, personally seen a situation where it's, there's no market risk. I'd have to get more details and kind of assess it.
Yeah, so I think this could be an interesting discussion later with the person asking the question. I think you answered this one already, Sarmen. How long do you typically hold on the company before selling it? So we don't have a minimum hold either, but we are long-term investors. So we're not out to flip the deal because by the time we add the value and our investors are getting the benefit of dividends. And another question, actually, public versus private. The way we structure things, we have a holding company. And we don't pay, let's say we're gonna pay distribution, then we just have a capital repayment, so which is not
tax-free,
which is tax-free. So you would say that's a significant tax saving. Oh, deferral maybe?
Yeah, I'd say deferral more than anything, because generally you get your capital back tax-free, and they can't generally just looked at tax money put in.
Yeah.
As long as you structure it right.
Exactly. So we think we do. So we have an individual hold co for each deal. So we don't have to answer your question, we don't have a hold period. We are long-term investors, but people, as Sarmen said, can exit after 6 months whenever,
It's the flexibility that we want, right? Ideally, anyone coming in is not looking to trade this, flip it within 1 year. They do have a long-term investment horizon, but I think it's comforting to know that in the event someone needs money, needs to liquidate, they're going through a divorce, whatever it may be, there's that exit opportunity, which I think is quite valuable, specifically in the private equity space, because there's quite hefty exit fees in PE funds.
Agreed. Is there a minimum investment requirement?
Yeah, so it's deal by deal basis, right? So depending on how large the size of our acquisition, whether it's minority, majority, or all, the lowest we've gone is 50,000. But if it's a larger deal, it might be 100,000, and we're adjusting it because contrary to angel list, we don't want 100 investors. Ideally, we have 5 to 7 investors. So if you split up a deal based on 5 to 7, generally that would be the minimum.
And then, but we are, they have to be accredited investors.
Yes, definitely.
So even we're looking at, jurisdictions outside of Canada, we are imposing that type of investor. So,
right, suitability, because we are, as Ara said, an exempt market dealer, we're governed by quite strict regulations. So, know your client suitability, we have to run all these tests.
So yeah, so that's why the minimum is important to us, and it's not an open to all. So these deals we're talking about, if you need more info, you'd have to register, it goes through a process. So it's not an, there's deals on our website, but that's very high level. You won't know what that deal's about. So before you invest, you will have to be accredited and suitable. But once you're in, and even on transactions, on the secondary transactions, so let's say you have shares you want to exit, and it has to be to another accredited investor that we approve, so that we have a great shareholding shareholder list.
Right, and so I'll add, 50,000 isn't, that little. But when you compare it to the minimums of your typical PE fund, that might be 500,000 to $1 million, that's a tenth. Or so it 50,000 to 100 is not a low figure, but again, when you compare it, it is
Yeah, definitely more accessible than you typically see.
exactly.
For most people, $500,000 is pretty much unreachable.
Exactly, yeah. And the issue with, not the issue, but what we found, there's this gap, right? Someone might have 100 to 200,000 to invest. So they're clearly not able to put that into a PE fund. It won't hit the minimum 500,000, but they can invest 4 deals at $50,000 or 2 deals at 200,000. So we're just trying to bring private equity to more people, democratize it, because they're
Democratize. We were playing with that word.
yeah.
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 Yeah, that's right. Any more questions? We're almost out of time here, but well, thank you, Todd.
My pleasure.
Yeah,
Thanks for having me.
So please feel free to email us if you have any other questions. And
I'd love to know more about the flow through question.
I think the flow through, I'm gonna guess that's an insurance expert. That tells,
gonna
they
say,
have
like-
knowledge that we may not.
Yeah.
So yeah. So maybe we'll get them on the next one. Sounds good.
And just a reminder, these recordings will be available on demand on our website. So if you came in near the end, then you can watch the beginning.
Well, thank you. Thank you for joining us.
Yeah, thank you.